quarterly survey has just been released by Ernst & Young and the Bureau of Economic Research. And in the studio from Ernst & Young is Derek Engelbrecht to talk about it. It's not unfair to say, Derek, that we are a nation of shoppers. So when we do see the sort of figures that we've seen for the fourth quarter of 2014, it makes me a little bit concerned. What has happened in the first quarter of 2015 as far as Ernst & Young and BER are concerned?
Thanks, Lindsay. I think you're right. It's very important to benchmark the psyche of the consumer in relative terms to the strength of the economy. And in this first quarter of 2015, I think it's important to note that retail sales growth in volume terms have increased in line with retailers' expectations. And as a consequence, we saw business confidence levels increase from 55 index basis points to 60, which suggests that 3 out of 5 retailers are confident about prevailing business conditions.
Yeah, let's go back to the first quarter of 2014 now. Instead of going from quarter to quarter, can you cast your mind back now and sort of give it to us in numbers, if you would?
Lindsay, I think what's important is that this particular index very closely follows the data the way that Stats SA would report that. And I think if we look back a year ago at this particular point in time, retailers coming out of a festive season which didn't really meet their expectations, and as a consequence they were a little bit gloomy. You may recall that this is probably about 9 months before the economy as a whole and consumers in particular were buoyed by a number of factors which nobody anticipated at that time, which has largely to do with the way that the crude price literally halved to more or less $50 a barrel in November and December of last year.
Yeah, that's been one of the major inputs, hasn't it? I mean, it's been so much for you to put into your survey. We've had the oil price going from 115 to 45, back to 62, 63, now back to 55 again. Then we have the budget where we get the various tariffs and various increases. We've got Eskom coming up, and understand Eskom may be even looking for a further increase in 2015. So the consumer's pocket is being pulled from pillar to post, isn't it?
That is what's making it very difficult to become very positive or very negative. I think every month consumers make pricing decisions based on what's happening to disposable income in that month. And you're quite right. So in as much as there was a 4 Rand per litre difference in the fuel price between August and December, which certainly contributed to some of the volume growth in the latter half of 2014. Some of that has already disappeared as a consequence of some of the fuel and related levies that came through at the beginning of March. I guess the good news is that consumers still have the ability to make some of those pricing decisions, and we'll see how that changes on a quarter-to-quarter basis.
The other piece of good news, of course, is, and we'll be covering this later on in the show, is that strike season is almost upon us. Well, strike season is the whole year these days in South Africa, but this year it seems to be far, far more a responsible approach from all parties. And if we don't have a protracted strike season, as we did last year and the year before, then of course that will give consumers more confidence and they will have more money in their pockets, and that could filter through both in the share price and the sort of numbers that you're reporting upon now.
That's correct. So just to make the point that you've made, but in the second half of last year, as soon as those strike effective income levels were formalized by virtue of the industrial bargaining action, we had already seen consumers reacting very positively to that. And it's particular sectors like the durable good retailers, which to a large degree is dependent on people's confidence and view of the foreseeable future, where protracted strike action and the impact on the disposable income has a particularly negative effect.
Let's have a look at retailers now, because not all retailers are created equally. You've spoken about the durable goods sector. I mean, for example, white goods. If you don't know whether you're going to be in a job, and you don't know if the economy is going to power ahead, even if it's only 2%, you're not going to spend 3,000 or 4,000 Rand on something, especially if you have to buy it on credit. Obviously, the grocers are completely different. So have you seen any trends within the retail sector itself?
There was one noticeable difference in this first quarter. So I think the first generic comment is that the volume growth that we've seen has been reported across all aspects of the retailers. But in particular, the durable goods retailers in this first quarter seems to have had a very positive experience. You may recall that they've come off a very low base over the last 3 or 4 years, where we've had the dual impact of unsecured lending growth being effectively turned off in a big way last year, as well as with an interest rate environment that didn't always work for them. But those particular group of retailers reported a confidence level which is significantly higher than the last quarter in 2014. And interestingly enough, at 79 index points is also at the highest level since 2007. Within this group of retailers, it was the hardware retailers that were particularly optimistic.
Yeah. What about apparel? Because apparel is an interesting one. There are different types of apparel as well. You go to somewhere like Sandton City and you see practically a new foreign retailer in the mall every month or so. And yet at the same time you've got places like Mr Price, the famous South African Mr Price, which is a cash retailer, also doing well. In between, I'm not so sure. What's your sense about apparel?
My sense from an apparel is that we've seen retailers over the last 2 years fundamentally rethinking their business model. I've certainly seen a much sharper customer segmentation approach, and I've seen retailers that really stuck to their core business. In other words, if you're a cash retailer and you appeal to the value-conscious buyer, that's the group of people you're going to absolutely focus on and make sure that you get and drive as many feet across the door. You are quite right, the international retailers have arrived in droves, and at an overall level I think is giving all of the local retailers a serious think about just how agile their business model is.
Very quickly, we had Capitec's results out yesterday, a sparkling set of results, and they've now got 6.2 million customers. When I look at those numbers, I say to myself, well, if those people are opening accounts, then they've got money, and if the accounts are increasing by 100,000 per month, then that's 100,000 new bank accounts that can go and be used in the retail sector, so we mustn't be too gloomy.
No, that certainly is a positive sign. There's no doubt that Capitec must have inherited some customers with the demise of African Bank at the second half of last year. But you are quite correct. Many retailers rely on unsecured lending as a source of their consumers' disposable income. And as long as that is responsibly managed through Capitec, I think that certainly gives them a glimmer of hope.
Derek, thanks so much for popping into the Power Lunchtime studio. That was Derek Engelbrecht from Ernst & Young.